What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight's a little bit different kind of a video, okay? I want to share with you a response, and an interaction basically on the Discord, okay? Just to sort of reiterate to you guys, you can reach out to me, ask me anything at any time, and I will get back with you as soon as I can. All right? I'm doing all of this for free. Okay, I'm not going to ask you for money. I'm not asking you for favors. All I'm saying is that if you got questions, you can hit me up on Discord, bro, and we can chat personally. I want to see each and every one of you succeed on your own in trading, okay, with the least headache as possible. All right, that's why I'm not asking you for money. You know what I'm saying? Now, granted, it does take up a lot of time. I don't blame anyone for charging people for asking the same questions 1,000 times. You know what I'm saying? That's not what I'm saying at all. All I'm saying is that for me, I'm good, just chilling, doing this for free. Okay. Now, the question that was asked here, as you can see, it says, bro, can you explain to me why gold went down yesterday? If you ask me, in this picture, you can see that New York broke the daily low and went up. I almost went into buy after this second big green candle. Right? So traders have these types of questions all the time. I love to talk shop. Now, something that I realized after this video that I would like to correct about my response here, right, is that I can't really tell you why a market is doing anything, whether we speak about fundamentals or we speak about technical analysis. I can't really explain to you why something like this might happen, but what I can do is just offer you sort of technical guidance. All right, I'll give you some tips and advice to help you hopefully in the future be able to identify these opportunities when they present in the session that you're trading. Okay, so I would like to clear that up right here from the get-go. All right, but let's just go through the responses. Okay, I can do my best to try to explain it from a technical standpoint, right? But the most basic, plain English way to say it is that the market went down because sellers were in control, right? There were enough sell orders in the market to push this market lower. Just point blank, period. That's the most simplest way we can say it, right? But technically speaking, I can show you some things on the chart that maybe will help you to clear this up. I'm going to send you a series of screenshots and also, voice memos that go along with each screenshot. So hopefully I can explain it clearly to you. Okay. But when you say, in this picture, you can see that New York broke the daily low and then went up. That's true, right? But the previous day broke the monthly high. Okay. So what that is, or you can say the weekly high. So we had the first day, Friday, or whatever day that was, that broke the daily highs. The next day broke the daily lows. That's a 3-day template. Okay. It's called a false break at the high of the week. We had the first day breaks the high, the second day breaks the low. Okay, so we have day one, false break at the high of the week. Day two, once it breaks the daily low, confirms that false break on day one. And we are now looking for a potential trading opportunity on day three, which was yesterday, right? So now I'm going to send you these screenshots and hopefully make sense out of what we're looking at. So here I'm just showing you on this 4-hour chart that we have a master pattern template at work. We have a pump and dump template. Okay. So we can see we started with this peak formation low that pumps up. And then on Friday, okay, we got a peak formation high followed by Monday that breaks the daily lows, which puts in our lower low on the inside. Okay. That's our first on the backside of the market, which means we will be now in a pump and dump template looking for pump and dump scenarios in our session, okay, on the backside of this market. All right, so here we're looking at the break of the monthly level high, and then we fail. Okay. We have that large gap down. We would treat that as a big bearish candle, right? Stacy talks about that, especially on a Monday when we see a large gap. If we see a gap down, that's a large bearish candle. So you can see that Friday breaks the high, Monday breaks the low of Friday. That's day one, day two of a false break of the high of the week type of day count, right? So that's your signal day. That lower low is your signal. And now, right here, we're looking at Monday and Tuesday, and you can see the very clear pump and dump template that's taking place on Monday and Tuesday after we put that 4 hour lower low on the inside in, right? That Monday's low, that's our larger master pattern lower low on the back side of the market. If we're on the back side, we're looking for pump and dump. So this played out exactly how it should be. But we can see any time that the market puts in a low like that and then starts to pump up, that low automatically becomes our anchor point or our potential target for the market to come back and take that out, right? So we should have been looking at that, planning on price to come back and take that level out, right? For a short trade. Okay, so you can see that master pattern template. Now let's zoom in even further on the day on a 1 minute chart. All right, so here we are on Tuesday. Okay, we have this 9:15 low that's put in place, okay, just before the 9:30 opening. Okay, so we have that 9:15 low that then begins to pump up going into the session, right? That low. And then when we start to pump, that low becomes our anchor point or our potential target. So the market then pumps up. We put in this head and shoulders pattern, all right? And then we start to dump for another perfect template on the day, a pump and dump. You can see though, right? We pumped up, coiled sideways for a little bit on that 1 minute chart right at the top, and then started to dump, right? And we're pulling back into that EMA, coiling sideways, and then engulfing to the downside over and over and over again. All right. So we have a pump and dump. We're in a very large pump and dump template on the 4 hourly chart. We're on a smaller pump and dump template that takes place over the course of only Monday and Tuesday. And then again, we have the micro pump and dump template starting at 9:15 on the day, right? We always need to be looking for this master pattern template. We always want to be able to identify either a peak formation low or a peak formation high that acts as our anchor point or our target. If we can identify that target, it simplifies everything else going forward, right? Does that make sense? Let me know if any of this causes you some type of confusion, right? Or if you're not that familiar with the master pattern, we can go over it and kind of get you up to speed. But that master pattern template is going to basically, show you all of this. That master pattern template is the entire strategy rolled into a single image. You understand what I'm trying to get at here? So there was the technical breakdown of this chart, and in particular, this Tuesday short trade in the New York session. Right. And remember, I'm not necessarily telling you why something happened. That's not even my focus. I don't give a damn why a move is happening. All I care about is being able to identify that opportunity when it plays out in live time. Right. And the easiest, most simple forward way I've been able to do that is by always picking out a target or an anchor. Okay. You always want to be able to identify a clear peak formation low or a clear peak formation high that acts as your target. All right. And sometimes it will be like this. You'll see it on every time frame, right? Like we just worked down from a 4 hour to a 15 minute, all the way down to a 1 minute chart on the day. And we saw the exact same pattern over and over again, a pump and dump template, right? Sometimes you won't have to look on that bigger time frame. Sometimes you'll only be looking at the peak formation from a couple days ago and treating that as your target. And then on the day, zooming in, you'll see something like this. Or maybe this will be 3 sessions, right? Tokyo, London, New York for the play, right? Either way, this is what you're looking for. It doesn't matter, about your news release and what the numbers were and what Powell's going to say and all that stuff. Okay. This is really what you're looking for every single time you go to your charts. You need to be able to identify a target. Then you can start thinking about entries, all right? Because as soon as you identify that target, okay, as soon as I say this low is that target, I automatically know what? I'm looking for a short trade. I'm looking for this market to pump up and then coil sideways depending on the time frame for however long. Like we're looking at a 1 minute chart here, right? So this market up here coiling for 10 minutes sideways, give or take a few minutes on either side. That's all we need to see, and then we dump down. Okay, we're taking out all of that, with that engulfment to the downside there. That's all you need to see to be able to get into this market. You are planning for a short trade. So the next time it pumps up into that EMA, coils and dumps, you're going to be in the market, okay? And you're going to have your initial target, okay? And then bigger targets to the left as you zoom out on your chart, right? So anyway, man, I know that this video is a little different, but I appreciate you being here. And until next time, I hope you continue to free your mind.